Welcome to the Zero Herd Mentality channel. Today's deep dive is going to get, well, pretty cynical, honestly.
Yeah, definitely.
Because, Wall Street algorithms and momentum traders are just collectively losing their minds over a stock called Intapp, ticker INTA.
Completely losing it. I mean, they are blindly panicking, and they've basically crashed the stock by, what, 58%?
Yeah, right around 58%. And the herd's superficial narrative here is that generic AI, things like Microsoft Copilot, is just going to completely replace junior lawyers and bankers.
Right, the old AI takes everyone's jobs narrative.
Exactly. And since Intapp historically makes its money selling software seats to those specific professionals, the market just assumes their revenue is going to vanish overnight.
They just think the business is doomed. But, I mean, our mission today is to cut through that herd's BS.
Yep.
We are going to expose how incredibly complex accounting rules and, frankly, stunningly lazy market assumptions are masking what is actually a free cash-flowing monopoly.
So let's talk about the fake out happening here. What are these algorithmic screeners actually seeing?
Right, so if you look at their official financial filings, algorithmic screeners just see a company bleeding cash. Specifically, they see a $35.8 million GAAP net loss over a 9-month period.
Which means under generally accepted accounting principles, they just look like a dying business on paper.
Exactly. But that reported loss is completely an accounting optical illusion.
Wow, really?
Yeah, it is driven entirely by $89.1 million in non-cash stock-based compensation.
Wait, hold on. I mean, you can't just wave away $89 million in stock-based comp as an illusion. That dilutes retail investors, right?
Yeah.
That is a real cost to me if I own the stock. How is that not a massive red flag?
I mean, sure, it is a real factor for shareholders, but it doesn't impact the company's actual day-to-day liquidity,
Right, okay.
If you look at the hard cash moving through the business, Intapp actually generated $100.6 million in operating cash flow over that exact same period.
Okay, wow. So the market sees a burning building, but it's actually just the smoke from the engine of a massive cash machine.
Precisely. And that smoke is actively triggering all these algorithms to just dump the stock based on headline numbers alone.
Okay, so they have the cash flow to survive, but survival isn't growth, right? If generic AI actually does eat up the billable hours of junior lawyers, how do they make money when those software seats disappear?
Well, far from being a victim of AI, Intapp is literally weaponizing it.
Okay.
They recently launched this AI platform called Celeste, and instead of charging per seat, they are shifting aggressively to consumption-based pricing.
Oh, interesting.
Yeah, so they deploy AI agents to handle complex deal flows and then charge a cut of the massive labor savings they generate for the firm.
Smart.
I mean, it drove 15% of net new bookings in Q3 alone.
But wait, why can't these massive law firms just bypass Intapp and use a generic AI like ChatGPT?
Because, well, out of the box, AI hallucinates.
Yeah.
It just guesses the next word, and invents facts.
Right.
If you are an Am Law 100 firm, meaning one of the top 100 law firms in the U.S. or a massive investment bank, an AI hallucination violates strict regulatory compliance.
Oh, absolutely.
That kind of thing ends in multi-million-dollar lawsuits.
Yeah, you definitely can't have ChatGPT inventing a legal precedent during a hostile corporate takeover.
Exactly. So Intapp operates as this mandatory, highly regulated semantic layer.
A semantic layer.
Right? Think of it as a strict translation filter. It forces the AI to understand the firm's specific, highly regulated rules, like multi-party ethical walls where one team can't see another's data before it speaks.
So they aren't fighting Microsoft, they're selling the safety harnesses for the AI gold rush.
Yeah, perfectly said. And once a firm installs those harnesses, they're completely trapped in the ecosystem.
Because of the integration.
Yeah, the operational and regulatory pain of ripping this software out is so severe that Intapp boasts a 123% cloud net revenue retention rate.
Wow.
Nobody is leaving, and they are organically spending 23% more year over year.
Let's circle back to that shared dilution issue I brought up earlier. Management obviously knows the market is totally mispricing them. What are they actually doing about it with all that operating cash?
Well, instead of hoarding their cash in a panic, management just spent $250.1 million buying back 7.3 million shares of their own stock.
Oh, wow.
And they did it with zero debt on their balance sheet.
So they used their actual cash flow to buy back exactly enough shares to cancel out that stock-based compensation dilution. They essentially neutralized the threat to retail investors.
Which brings us to the analytical bottom line here, the valuation absurdity. Because of this blind panic, this company is currently trading at a distressed 2.7 enterprise value to sales multiple.
Just to put that in perspective for you, a typical high-growth cloud software company usually trades at 6 to 10 times their sales. At 2.7, Intapp is practically in the bargain bin.
It's a severe statistical anomaly for a highly entrenched enterprise software company growing cloud revenue at over 30% a year.
Especially with private equity titans like Great Hill and Temasek already owning 54% of this stock. I mean, this valuation is a ticking clock.
The takeaway you really have to internalize is this. If you rely on the herd's surface-level data, you completely miss the actual mechanics of wealth creation.
Definitely. Which leaves you with this final cynical reality check to think about. If the public markets continue to blindly misprice this asset, how long until a private equity firm simply buys the whole company at a massive premium, locking retail investors out of the upside forever?
Right, the smoke clears, you realize the building was never burning, and suddenly someone else owns the cash machine.
Exactly. Thank you for watching this deep dive, and please subscribe.